Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you've joined us for the second day of the Precious Metals and Critical Minerals Conference. The next presentation of the day is from North Bay Resources. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting. At this point, I am very pleased to welcome Jared Laserson, Chief Executive Officer of North Bay Resources, which trades on the OTCID market under the symbol NBRI. Welcome back, Jared.
Thank you. Okay, so our company, North Bay Resources, is involved in really two primary projects. They are integrated. So just really from the top level, North Bay, and this presentation is focused on the Fran Gold Project and the Bishop Gold Mill. Fran is located in central British Columbia. Bishop Gold Mill is just south of Lake Tahoe in California. These are the key assets of the company, and while the company has a number of other projects, this remains our focus. This integration of the Fran Gold Project and the Bishop Gold Mill is really not just key assets, but cash flow generator. And I'd say just from the top level, this is what makes North Bay unique. Is we are a cash flow, a small gold producer at this point. Really, one of North America's only small gold producers. We're not be considered a major, maybe a small mid-tier at this point, but we are currently ramping up production. So that's where we stand. It's a unique position within the market. During other market times, it might not be an advantageous or an easy position to be in, but in times of, as we are now, with a high gold price, we are highly leveraged to the price of gold since we focus on a high-grade gold production. That kind of covers the development strategy, and then on this slide, the processing capabilities we'll get into. But to reiterate, the Bishop Gold Mill is a permitted operating mill. More to the corporate overview, back into the details. Our California operations are the Bishop Gold Mill, 96 tons per day. And the business model, as I discussed, is really the integration of high-grade gold project with a existing permitted mill. And this really reflects M&A that occurred at the inception of not the company, but since I took over the company about 2 years ago. So that's really been our kind of rollout of the company as it stands today. Acquisition of a mill, acquisition of or joint venture in a major gold project, and then development towards cash flow, which is where we stand today. Okay, so Fran Gold Project, which is our flagship project. This is a project I've actually been involved with for quite a while. There's been over 50,000 feet of drilling in 104 holes. A very long strike length, over 1,000 meters, 3,700 foot, drill defined, with gold veins grading up to 2.5 ounces. The project location is next to Mount Milligan. So for those of you who don't know Mount Milligan, that's owned by Centerra. It is one of the largest, and I wouldn't say newest, but certainly in the modern era, one of the largest, newer copper gold deposits in North America. I know they just announced an additional 10 years on top of the original mine plan because they've been drilling extensively. So I would estimate you're now probably north of 500 million tons at Mount Milligan, and we are proximate. You can walk to Mount Milligan from where we are. This also speaks to infrastructure. There is a triple wide mine road that goes past our mine road, basically, which is an existing Forest Service road. This road is used heavily by logging, which exists in the valley in the area. So we're in good shape infrastructure-wise. There is cell service at the mine site, the project site. So again, infrastructure, a lot of infrastructure in place. Power runs down that main road, so it's about 20 kilometers to the mine site, but nominal in terms of infrastructure in northern Canada. Main North shipment. So this summer we discovered or reestablished a high-grade surface zone, and we shipped a 10-ton test shipment. We were in there in June for exploration to reestablish the zone. July, we began taking out some tonnage, and September, we continued that. The ore tractor trailer load arrived in super sacks, arrived at the mill in November, and we have been doing some upgrades. We had some inspections and had some personnel changes, and we will be processing that ore momentarily, probably March 1, I believe we have scheduled in to get that done, and that will provide really final proof of concept on the high grade section. We've already run over 100 tons of low grade material from Fran plus done metallurgy. I'll speak to that in a second. Preliminary resource estimate. I'll get into that in a little more detail here, but the core zone. So I was disclosed this is not 43-101 compliant. But with 104 holes drilled, we have sufficient data to do an internal resource estimate. We worked with Leapfrog 3D technical, and we've come with a non-compliant and internal resource of 20 million tons grading 0.5 grams per ton. Again, not that long ago, a half gram per ton would be really close to the cutoff at this point with the price of gold, particularly looking at comps in the area. I mentioned Mount Milligan, but also Blackwater. Artemis Gold's Blackwater is in the same region. It's about 150 kilometers away to the south. Their all-in sustaining cost, I believe, is around $18 per ton. We wouldn't necessarily be at the same scale, but it gives you an idea if you know your gross value is $60, $70 a ton. There's a lot of room. I'll just leave it at that. We haven't done PEA. We don't have a formal 43-101, so I'd rather not speculate too much, but a half gram a ton these days seems, appears to be economic. Okay, so here's a little more details on the resource. The image in the background, I'm not sure how well everyone can see it, but to the left side is the core zone. This has been heavily drilled. There's a core high grade section, and that actually extends to surface where we have very high grade material up to 6 ounces per ton. That was discovered as part of our mini bulk sample this summer. Just speaking to the resource, again, this is internal, but we believe we have sufficient data to have reasonably high confidence in this. So we're looking about 325,000 ounces at 0.5 in the main zone, which is the core zone. And then if you add the east zone, which is the zone to the right side on your screen, that's a bit lower grade, but it advances the contained gold to 500,000 ounces. Again, this was done with a block model and so forth, but it is not 43-101 compliant. The east zone has not been drilled out. It potentially extends further down the hill. The project is open at depth, and I don't know if you can see behind the main zone plus east zone text there, that core zone, there is high-grade material at depth, which extends. So we're open at depth, and we're particularly open to the east and northeast. What's interesting is that this is essentially a gold deposit. There's very limited copper and silver. But as you go east, the gold grade drops, but the copper grade increases substantially. When Mount Milligan was discovered, they discovered high-grade gold quartz work, stockwork, quartz stockwork. They then followed that and found the copper, essentially porphyry, but the disseminated copper deposit, the very large tonnage. So I'm not drawing a comp there, but I am saying that that's how Mount Milligan got to their copper, was through a high grade or gold quartz stockwork. So we will continue to explore to the east, but right now we feel we have enough material to begin to advance the bulk tonnage side of the deposit. Metallurgy, I'll just mention that the metallurgical testing that we've done on the lower grade material demonstrated 97%, and this is independent metallurgy done by an independent lab, 67% by gravity, and 30% by flotation. So I do not expect to get a 97% recovery, but as you can see, and as our experience running material at the mill, recovery, particularly by gravity, is very high, which speaks well to the economics, but really to the key to it all, which is that the gold can be separated and it is not complex in any way. And I would say this is primarily because it is just mainly gold. There's just simply not a lot of other metals or material in there. Okay, so just some highlights. I've covered most of it. The maiden ore shipment was completed in November from the summer work after we got in our assays. The material, so basically what we did is we assayed every other super sack. We shipped about 10 super sacks. So we assayed every other super sack. That got us an average of 3.8 ounces per ton, up to 6.62 ounces per ton. At today's valuation, 6 ounces per ton is equivalent to $30,000 rock. At 3 ounces per ton, you're looking at $15,000 rock. So my general thinking is that we have a lot of room to run here in terms of potential profitability, even with substantial dilution. Either you know, in the course of packing the material, we get some dilution, and of course in mining, just removing the material, we're going to get some dilution. But because this is not a large-scale operation, we don't see a major issue with that. I would also add that although we only went about a meter and a half deep, the material got better as we went deeper. That 6.6 ounces per ton was from the last shipment. I think we pretty much covered it. 22,000 pounds, so about 10 tons. Just some information on the earn-in on the project. It's a 50-50 project. We're in the process of the earn-in, which just requires us to remove a specific tonnage. All right, so now to the integrated operation. So Bishop Gold Mill is located near Bishop, California. It's fully permitted with an approved plan of operation mill, 96 tons per day, which generally would be considered on the small side. But again, it becomes clear why we have focused on high-grade deposits. The other thing about high-grade deposits is they can travel. Our shipping cost currently is about $350 per ton from central British Columbia, where the mine is, where the project is. Not really an issue against $5,000 rock, $2,000 rock, even $1,000 rock. So you're down to 0.2 ounces per ton with substantial profitability. Our cutoff at this point is less than 0.1 ounces per ton in terms of operating cost, and I'll get into some of that later. Tailings facility is new. The mill had never operated when we acquired it, so there's no legacy environmental in the modern era. We appear to be getting about 80% gravity from ore. We processed about 100 tons of ore from Fran. It was lower grade material, but we did that as part of ramp up. We produced probably north of just under about 10 ounces in that process, but we have all our metrics in place. Like I said, the material seems to be highly amenable to gravity. Primarily right now we use a centrifuge. We do not have the flotation online yet since we're getting such high recovery, but eventually we'll bring the flotation online. Flow sheet, fairly standard, jaw crusher, ball mill, and then concentrate goes through gravity centrifuge. We also run it over a table as a scavenger, and then flotation. Again, we've been getting such high recovery. We haven't turned the flotation on, but at some point we'll bring the flotation on as well. tailings disposal, water management. We have a water management license, and with a well on site. Again, with the MET process, 97% gold recovery. Again, I don't expect that, but that has been that's our target, and that's what the independent MET lab achieved. We're able to get 7 ounces per ton from low grade ore and up to 40 ounces per ton concentrate. So these are concentrates for higher grade ore. That then ships to our refinery in Reno, and there essentially will take anything about 3 ounces per ton. So in terms of final steps, we do have a furnace on site. We can pour our own bars, but right now the refinery just makes things much easier. That's a whole other undertaking, using the high temperature and pouring the gold. At some point we will do that though. Again, just some specifics about the mill site, Bishop, California. It's just off the highway. There is assay lab, building, storage for hazardous materials and so forth, offices. Tailings pond exists, is being used, is approved. That's the main focus of regulators. They really just want to know what's going in the tailings pond and ultimately how things are cleaned up. We do have, I believe it's $198,000 bond in place. That may increase over time. We regularly work with regulators on a near monthly basis. But right now we're in good shape in terms of tailings facility. We've barely used it. Water wells and monitoring obviously is key, and we are fully permitted. Occasionally the regulators want us to change something, upgrade something, fix something, but we're set up right now for midterm operations. Okay, projections. So, this is forward-looking. We want to disclose that. Right now, we're in discussions with a Nevada group. We believe we are most of the way there in being able to pull out of Nevada. Right now, basically during the winter, well, we're not able to, or we've shut down in British Columbia as well. We are permitting a 10,000 ton bulk sample. So we would expect to have that by summer, and that's at Fran. We are talking about some interim ore, 1,100 tons, 4 ounces per ton. They've assayed more than 100 kilos of material. It's set, it's ready to go, and we're in final negotiations on that. Again, this is forward looking. We have not shipped any ore, but that's what we're targeting over the next 4 months. And then with Fran, that would be full commercial production. The gross number would be, again, based on the 3 ounces per ton that we've achieved so far, would be 10,000 tons for revenue of 100 million. There's a number of different splits on that. It's a joint venture, so it's 50-50 on the mine. And then the mill is 70% owned by North Bay. So net revenue, 32 million. If everything goes smoothly. Again, this is forward looking. We need to get permit in place for that. But right now, there is a lot of positivity around mining in British Columbia. The government, First Nations, everyone really wants to see things move. And this is not a full mine permit. This would simply be a bulk sample permit. We would then follow on and either decide to develop the larger bulk mine or just focus on the high grade material, or a combination of both. This is just really a summary of the spreadsheet I presented there before with some details. Again, I would suggest downloading the material, but really processing costs in here and transportation costs, I think is always of interest. It's significant. Even from Nevada, you're looking at about $110 to ship from Central Nevada. Fran by rail is $230. Artemis put in, along working with Canadian National Railway, put in a very large facility at Vanderhoof in British Columbia, about 100 kilometers away, to ship concentrate for Blackwater, which is now in commercial production since May. So we can take advantage of that and reduce our shipping costs. Again, if the grade holds, these numbers are nominal, but even if grade is significantly diluted, the shipping cost is still well within reason. And that really essentially is the major cost. A little about me. I took over North Bay Resources 2 years ago and have vended these assets in. Currently, I'm involved in North Bay as my primary project, but Fran being a chunk of that $3 billion. But I also manage some copper and primarily a large magnesium asset. I founded MGX Minerals from 2014 to 2020. Raised about 50 million in investments, advanced projects. Full disclosure, I'm still a director of MGX, and MGX is the joint venture partner on with North Bay on Fran. So I'm trying to integrate and really bring all these projects together under one roof. And you can see the M&A opportunities. I'm not going to speak to that specifically. MGX was largely involved in lithium, and I was really involved in the invention of the modern iteration of direct lithium extraction. MGX and I accepted in 2018 Standard & Poor's Platts Metals Award for leadership in base and specialty metals. I've been involved with a number of other companies in mining and primarily in diamonds and in lithium. I have a degree from UPenn. Share structure here, and then we'll wrap up and open to questions. A very large number of shares out. This is legacy from when I took over the company. Almost 10 billion shares out. On that note, we have a shareholder approved 1-for-100 consolidation. At some point, we'll get to that. Right now, we're just really focused on operations and moving things ahead. I own, on a fully diluted basis, directly or indirectly, about 20% of the company. Currently about 30% of the company. CMC Metals, which is the company that we acquired the mill from, owns about 10% of the company. And then the main fund involved with the company is Tangiers. I will speak just to public float here. So there's approximately 5 billion shares in public float out. That has not changed beyond 130 million, which represents about 0.15% of the company. The public float has not changed since 2021. So I haven't sold any shares. Tangiers hasn't sold any shares. CMC Metals hasn't sold any shares. And there's just been a nominal amount of conversion. I don't know that there's any company that can say that. Market cap has been a steady 5 million. We have gone up to 10 million, but we appear, when you look at Scorpio, Arizona Gold and Silver, comparable projects that are not producing in the 50 to 100 million dollar market cap range. So I think we have some room to run. I don't exactly know why, but it may be structural. Maybe we need to show cash flow. It just is what it is. But I think it appears, like I said, a 5 million market cap, we appear to have room to run. Okay, we're down to the last few minutes here. So let me get to questions. First question here is, do we have plans or when we plan to move up to OTCQX? It's certainly in the works. We were focused on that, but things have really accelerated with operations, and we're just plowing every dollar, time, and energy right now into operations. Timing, I thought we'd be well on the way right now. I would say we're probably about 50% of the way there in terms of all the necessary steps to move up to a QB or QX. But like I said, to spend 50 or 100 grand uplisting when we can put that into mining. I know shareholders might not want to hear it, but that's just our reality. We really want to just get the dollars flowing, and then that pays for all the kind of pubco side stuff. 43101. Again, we're focused on operations, generating cash flow, but 43101 is certainly in the mix. That would be really the next step in terms of the broader development at Fran, outside of the immediately cash flow focus. Next one is on Insider Cornerstone Holdings. What is your vision for bringing more institutional capital? Uh, Institutions we are talking to, they love the projects. They certainly like management. It really is a structural issue more than anything right now. So share consolidation and uplisting, I think, would bring institutional in. But we're honestly not that focused on raising money. We've got $1 million. I'm personally in for north of $500,000 into North Bay recently. We're pretty much there. We've acquired the mill. We've joint ventured the project. We've hit bonanza grade this summer. We don't really need a lot of cash. It really is just moving things forward in terms of processing, which is literally happening right now. So the question is, how do you plan to communicate the combination of near-term high-grade cash flow and long-term bulk tonnage deposits to the market? So this is not easy because everyone it likes a simple story. It is what it is. I wouldn't say it's particularly complicated, but it is certainly unique. We were shocked when we hit 6.6 ounces per ton in the last assays in October from the summer program. But it certainly has made life easier. We now see strong cash flow from the high grade material, and then a parallel development. Right now it's secondary. It may take on a life of its own, but really a parallel development in terms of the bulk tonnage deposit. So that represents the multi-billion-dollar deposit. But the high grade material could represent 300 or 400 million. Again, I'm just speculating, and I'd rather not get too much into those numbers. But simple math just dictates if you're running 2 to 3 ounces per ton high grade, you do not need that many tons. And really, there may be a decision made that we just leave the bulk tonnage alone and we just develop the high grade. The 10,000 ton bulk sample will really dictate, and we'll have a much better idea of exactly how much is there and whether we move ahead with development of a small mine or the larger mine, and exactly what happens on site in terms of the mill. At some point, obviously, Bishop will pull out of Nevada, and we will build a mill at Fran. It's just a question of what scale that mill is. In all likelihood, it will be a larger, low-grade mill, something very similar to Blackwater. Not necessarily as large, but something very similar to Blackwater. Question about how we plan to enhance value via recovery and mine development. The quote is more drilling and more tons. I hear you. I spent 20 years in exploration, probably more than that. All I ever known is mining. And yeah, we're not good with that model. I hear you loud and clear. That is not us. We will not continue to drill and tonnage. We are cash flow focused. Mainly we only get involved in projects where the hard work is essentially already done. Fran does not need any more drilling in terms of development. It would be good to drill out some more, but that is not a priority. The cost of exploration, the permitting time, and particularly the dilution of shareholders, of which I would reiterate, I am the largest. So yes, we are cash flow focused. It is why we essentially have not set aside the bulk tonnage deposit, but why we're really focused on near-term cash flow and also acquisitions, like I said, in Nevada to feed the mill as Fran ultimately out 2 years transitions to development of its own mill. How many tons in 2026? We're looking to do. Right now, we're set up for about 1,000 tons in Nevada, but we'd hope to double or triple that. Really, the focus is 10,000 tons at Fran. So I would target 15,000 tons of high grade in 2026. Post consolidation share count. So post consolidation share count. It's really, and it's probably much easier to think about if you want to set us in terms of comps, dropping 2 zeros off. So we're, let's say 10 billion shares. So we'd be looking at 100 million shares anyways, 100 million shares would be the post-consolidation number as approved, which I think is a reasonable number for an advanced company. In terms of market cap, that would be, again, the comps are showing 50 to 100 million right now. If we were taken seriously as a producer, it'd be substantially higher than 100 million. That would be equivalent to a dollar share price as it stands today. I'm not speculating. I'm just giving you the simple math. And I think that's pretty much it here. We're past the 30-minute mark, so I just want to thank everybody. And I believe I'm done here. And contact information, it's on the screen. It's in the deck as well if you want to download that. My direct email is on there, so feel free to contact me directly.